Hey guys, welcome to the Trade Genius podcast. Bob and Phil here as always. Something just happened and it's rather earth-shattering. Really haven't seen something like this since the days of Andrew Jackson. And you're going to want to hear about it because it has important ramifications for everybody down the road. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Bobby, that article about the Reserve Bank of Australia was something else.
Yeah, so they're going to strip the Royal Bank of Australia of their power to set interest rates. And there's 50 other reforms planned as well. I'm not going to get into all the detail, but the purpose that we're sharing this with you is that we just literally talked about this a couple days ago, that when we get to the end, politicians are not going to allow a shadow organization to really control their destiny to stay in power. And I think Australia took the first shot across the bow. If you think about it, Phil, really only the Western nations abide by a nominally independent central bank. And I know I don't want to get the hate mail that they're not really independent, but they're a different power structure. How's that? Is that fair? Mm-hmm. And, I guarantee you, Putin gets what Putin wants out of his central bank. Xi gets what Xi wants out of his central bank. And but here in the United States and in England, stuff like that, you can have the central banks push back against the government and what's happening now in the United States, right? So you have, we talked about this too. People are wondering, why are we having really getting the sell-off in the markets to the level of the magnitude that it probably should be based on just simple portfolio theory about, interest rates and earnings yields and stuff like that, is because Janet Yellen has a slush fund and she's been using it to counteract Powell. And so you go back to what's happening here in Australia is that they're stripping that central bank of that authority. Now, it can go many different ways, Phil. They can use some sort of AI, machine learning, mathematical model, right? Or they can have politicians do it. You know where it'll end up, right? It'll end up in the politicians' hands. Yeah. So, what's your thoughts on this? I mean, there's some really interesting ramification to this that really affects trading and investing going forward.
Well, I think that when I first learned of how central banking worked and the whole infrastructure of it, I thought, wow, what a sham, right? Because especially in the United States, it's really a private entity, right? That's not really part of the government. There's no Federal and Federal Reserve. Some of you have probably already heard that numerous times, but it's because they are truly a private entity that's supposed to be politically neutral. But when it comes to the policies and things like that, there is no such thing as politically neutral. You're either serving one side or the other, in my opinion. As far as what Australia is doing, I think is really wild. And this is actually one of those headlines that isn't a headline, but probably should be, because we really haven't seen a central bank get stripped of its power in hundreds of years, right? Andrew Jackson was the last guy that threw out the central bank. And then when the Banking Reserve Act in 1913 or 1914, whichever year that was enacted, and the Federal Reserve was born. But, for a central bank to be stripped of its power, I think it sets a precedence where I think the governments are getting tired of them being wrong. And I think a lot of the central, they act in unison, they're not really independent. They're basically a big global cabal, and the Fed is the head of that. And I think that what happened in the pandemic, I think the printing that they did, and they all did it, put us over the edge where now we're dealing with this inflation monster. And I think, give Australia credit, they said, you guys basically blew it through COVID, because that was the catalyst of this. They looked back and said, you guys printed far too much money for far too long. And you and I have always talked about where the minute we made a new high in the stock market after COVID, well, then obviously something wasn't that bad, because I mean, it instantly recovered. So why did they continue to print for another year and a half, right? I mean, they just threw way too much liquidity at it. And now they're dealing with a situation where the bank's trying to back the liquidity off. Yellen's trying to elevate the liquidity or at least maintain it so that the market doesn't roll over, because as you guys have seen in our previous liquidity videos, that we're only at these levels because of the amount of liquidity that's in the system. And so if they were to take that all out tomorrow, like if they were really serious, Bob, about getting rid of inflation, they would be dropping the balance sheet like hot potatoes. They would just be week after week, hundreds and hundreds of billions of dollars rolling off that thing. But they can't really. So they try to do it at a measured pace. But then, then they have, Yellen's fighting their efforts. At the end of the day, we're trying to maintain like, oh, everything's fine and dandy, but this liquidity is also fueling the inflation fire. So the point here is that I think it does need the decisions for that stuff needs to be taken away, I think, from the central banks. I never did get why a central private entity would dictate the monetary policy of a country. Like, let the country's treasury dictate that, right? So I just think it's an interesting precedent that we haven't seen in decades, if not hundreds of years in the world. And I think a lot of people aren't noticing this, but I think it's quite an interesting development. And usually when you see these things happen, it's the first of many that come. So who knows what we see down the road in 10 to 20 years, but maybe the Federal Reserve isn't what it is today, or maybe it doesn't even exist at all, and it becomes consolidated back into the treasury.
It was one of those like, oh, by the way, articles. And I'm sitting there going, whoa, this thing's pretty profound.
It is.
Yeah. And I agree with you, Phil. Look, one of the reasons why they created the central bank, obviously, the bankers want to be rich. They saw how well it worked in Europe, in terms of, but it enabled governments to do things that governments ought not to have been able to do. It allowed them to massively, grotesquely overspend, right? Which creates imbalances in the system. So Congress never has to fight. They just punt. Republicans just, you want this, you get this. Democrats, you want this, you get this. And now we got this monstrosity that no matter what decision we make now is going to cause pain and potential like civil distress. I'm not talking about civil unrest like a couple buildings burning in cities. I'm talking about wholesale distress on the system because of these policies. They basically took it to the wall. And same with wars. Wars are enabled by central banks because you'd have to tax your citizenry to fight the war. Otherwise, where you can't fight the war. And so it becomes problematic. And the other thing too is that a minute you overspend, if it's in the treasury, you get inflation immediately. Whereas, you and I were joking the other day about, hey, why can't the Mint just print a $30 trillion platinum coin and hand it to the Fed and say, here, you store this. Oh, by the way, we're not paying any interest on it either, right? There you go. You just wiped out the debt, and one didn't wipe it out. You just made it kind of like moot, right?
Right.
And so, yes, it just brings it all back to the people. Look, states in this country have to nominally be balanced budgets, and it puts governors on and where the Federal Reserve allowed this grotesque thing to happen and the banks to become insanely rich because of it. So I think so. I think this is a harbinger. When push comes to shove, politicians, I've always said it, politicians will never allow the central banks to determine whether or not they stay in power. Look at George Bush. He got knocked out by the central banks. Remember that?
Yep.
They forced a recession on him and punted him from office for no reason. They just did it and put us into a recession. And, and you can say, look, I'm not a Biden guy at all, but, what Powell's doing could potentially blow the Democrats out in the next election, right? If I want to be fair about the process, right? He has a lot of good reasons to do what he does. But to your point earlier, they didn't have to raise rates as high to be able to kill inflation. All they had to do is cut out margin in the stock market,
right,
and tell the banks to stop lending.
Right.
But instead they went ahead, they crucified the American middle class, and we still have stock markets that are nominally, we know that's a bear market, but you know what I'm saying? There's no stress in it. Nominally you see the market's up, crazy stocks are still getting bid, which would have never happened if you took the margin away and you took away the liquidity. But you could have kept mortgage rates at 2 and 3%. There's no reason to take them to 7%.
Right.
You just take away the money the rich had, and so you can't get away with that if it's forced into a political environment, because then the battle will be fought in the ballot box.
Yep. Yeah, I agree with you that there was a number of different things they could have done other than the interest rates, but I think they were trying to, I think what they're trying to do, Bob, is they're trying to get now everyone to be a nation of savers, which we've gotten away from that for a long time. But I agree with you. Like they could have outlawed zero DTE options, right? Which is now becoming the dominant volume, and you can see it creating a lot of speculation. I think it's detrimental because these things always end in a crash, and maybe who knows? Maybe the Fed's just like, yeah, ended in a crash. I don't know, but there's different ways to do it. But this is what's silly, right? Because they kind of created this problem, and now they're forcing a recession to fix it. And so it's like, well, what good is it then? You can't do it the right way. You can't do it the wrong way. I mean, it's like at some point, like we have to sit around and go like, what net good are you or have you been? I struggle to find any benefits to them recently, or when I say recently, like in the last few decades. Volkner, probably the last one that had any sense about him.
Oh, look, the Fed caused the first Great Depression, so I totally agree with you. There's no reason why. Why can't interest rates float? Everything else floats. We're supposed to be a capitalist country, right?
Right.
If there's too much money, interest rates go up. There's not enough money, interest rates go down.
Right.
If they're worried about, people, the argument against it is that, well, if you have a fixed money supply, you get hoarding and stuff like that. Well, that's what taxation's for. And then you can also just build in a productivity / population growth money supply increase. It just could be baked in. It's an annual increase by the mint could produce so many dollars. It hands to the Treasury spends it into the country. There's a lot of ways you don't need a central bank. The only reason why you have a central bank, it allows shenanigans to happen because it's outside the purview of transparency.
That's
so
right.
Yeah, it blew me away that I would not have expected it from Australia, Phil. Absolutely not.
No, that would have been the last place. Actually, I thought that would happen. So it's pretty interesting that they have happened. So let's see what happens. Maybe, people catch wind, or I think a lot of times what happens is it's like anything new, people observe, right? Like Bitcoin, people observe. Next thing you know, the CME makes Bitcoin futures. Next thing you know, the institutionals get involved with it. So I think, something similar with this, it's brand new that countries have not done in recent memory. And I think there's going to be a lot of people watching what happens here. But I think on net, it's better for everybody that power is shifted. So ultimately, I think they'll benefit from it, but they're swimming upstream because the rest of the world isn't working like that currently. So let's just, it'll be interesting to see how that plays out.
Well, they were looking for a black swan, and maybe we ended up with a black kangaroo.
Yeah. Speaking of black swans, before we wrap this up, Bob, I wanted to talk. We don't have any charts or anything, but just shooting the breeze here. The market to me is just sleepwalking to a cliff, and we saw some kind of erratic behavior today in the market. But I think after tomorrow, which is OPEX, I'm really concerned about, we've been talking a lot about this market rolling over, even though, we've been long since our risk on signal, but the risk on signal is flirting with risk off soon. And I'm concerned that this trajectory that we're on is about over.
No, I agree with you. And we're going into a cycle here because the new VIX contract just came into play. And the way they play the game here is they sell the current one and they buy the next one out to create a contango environment. But with the VIX so low now that it doesn't make financial sense for those guys to take the risks they've been taking. So you're going to look for some sort of snapback. And the thing with the VIX is the VIX doesn't like to move up slowly. It comes down slowly. It likes to gap up and cause issues there. And plus, we're going into May 15th to the end of June is a seasonally weak period for the market. And we're going into earnings. Look at Tesla. That was not fun for Tesla. And the thing is, everybody noticed was the cash flow basically evaporated for that company.
Yeah, huge.
And that's huge news, Phil. Because if the only reason why Tesla gets a pass is because its growth, and they said it's going to grow its earnings into its stock price. Well, if it has no cash flow and they gotta basically give their cars away for free, you're looking at a $500 billion crazy market cap for a company that's worth nominally 50, maybe $5 billion. I mean, I'm not being parabolic here. I mean, it's worth salvage, right?
Yep.
And can you imagine when they start applying that to other companies like Apple? Apple has borrowed more money. They squandered. I mean, they're going to write textbooks about this stuff in 20 years, how Apple squandered trillions of dollars of cash flow on buying back their shares and for their stock to go nowhere.
Yeah.
It's just getting absorbed into sellers right now. And it's just going to be, I think it's going to be really painful to watch because people don't understand, Phil, that this whole phenomenon is passive investing coupled with with market cap weighted indexes. And when these things turn the other way and people start selling, then these big guys go down harder and it brings the indexes down harder. And you're like, hey, my company's doing well. Why is it getting whacked? Well, it's in that index.
Right.
And you have no choice.
Right.
And that's why I'm not a big fan of passive investing. I'm not a big fan of market cap weighting. I think it was another scam they put on people, and just for them to create a buy narrative that when it turns nasty, it's going to be really nasty. And the reason why they did that, guys, is because of protection coming out of 2008. This is why they're not going to get sued this time, because they're going to say, hey, we bought the index. Hey, you signed this agreement that said that you were low risk and this was a low risk ETF. So it was all about them. It was never about you. And for those people who keep telling us on the thing that we're in a bull market going higher, this market's gone nowhere for 2 years. Nowhere. It's just been rotating in and of itself. And what I'm personally worried about is that I'm still long a lot of energy, even though I've been raising cash through this uplift, is that I think this next dunk might be a dunk, and I may take a hit here on my portfolio. So I'm constantly looking and jiggering and trying to figure out how I can even hedge energy, because if we rip into a recession, I think, the recession may precede inflation, and that it'll probably bring oil prices down below $80, maybe back in that area. The argument that we have, people, Phil and I go back and forth on, is that, Phil still thinks there's a pretty good test of the 40s maybe before we really go into some sort of inflation area. I'm still in the camp of we may inflate first that causes the recession. So this is kind of like the internal, battle that I'm having. Is Phil going to be right on this before I'm right, or is Phil going to be right before I'm right? So it's something to watch, because if energy goes, that's really, tech's already really kind of rolling over except for the big boys, and now energy really has been rock solid. And so we'll see if that becomes a hiding place, or if we're going to get a general sell-off. And I'll leave the last words to you, Phil.
Yeah, I mean, I don't have a problem with energy going higher first. I just think that if you look at historically, energy will bottom the last. And then when it finally does bottom, like when it chases the market down, when that finally does bottom, and I don't know where that is, maybe it's 60, maybe it's 50, maybe it's 40. If it's below 40, that would be beyond what I think is probable. But if we do get down there, that'd be like Bitcoin hitting like 8K. Like you buy hand over fist, because it will go back up, and it'll probably go back up rather quickly, especially in this environment that we live in. But yeah, I think the bond market ultimately doesn't lie. I think liquidity ultimately doesn't lie. We'll talk about it tomorrow. We'll go over the charts and look at Bitcoin and stuff. We haven't done that in a while, because I think we're at an important pivot point here in the market. April's seasonally very bullish, and everyone looks at that. And I think that's why the CTAs, right? If you're not familiar with the CTAs, they're basically money managers for people and their portfolios. And they're all long, like as long can be, longer than the longest long you've ever seen them being long. They're all in. And the data that we share with you guys, that Bob digs up, that I dig up, tells you that we're walking to a cliff. And so that's the problem here, is major disconnect. Part of the problem is that when it comes to those guys, they have to beat the market. So it's almost like if the market's going up, they have to rush into it, even though it's technically not the right thing to do. They're just forced into it, because if they don't perform, they don't get paid. But unfortunately, it incentivizes the wrong behavior. So I just think that, we're ripe for a big old crash. And when I mean crash, I don't mean like stock market crash in 1929, but I mean like, 5% pullback rather quickly. We could grind up for months trying to grind up 5%. We can be down in 2 weeks, that kind of a thing. And usually at this point in the cycle, with the yield curve being where it's at and bottoming, that's exactly when it happens. That's what happened in tech in 2000, and that's what happened in 2008. The yield curve bounced, started going back up, and then the pain came. So we're right in that window for that. And that's why I think it's good to kind of look at the charts here going into tomorrow in the OPEX. And as we go into earnings next week, if those earnings aren't top notch, watch out below.
I agree. Hey guys, thanks for listening. Hit subscribe, hit the notification bell, check us out, put us on your calendar, because sometimes even if you do all those things, you don't see that we do this. We post every day around 4 p.m. Go search for us, and we'll try to steer you guys in the right direction here. I think we think we have a pretty decent handle on things. We're definitely conservative, and we want you guys to not walk blindly off the cliff with this market. Because remember, if the market's down 5%, I guarantee your portfolio's down 12 to 15%.
Yep. All right, guys. Thanks for tuning in. We'll see you on the next one. Take care.
Trade Genius.